Today I want to talk about gold. It has been very popular in the last few years, so I want to do a quick review. The most important thing that I want to say at the start is that the truth is, if you buy any gold before or during a crisis, then it works. But if you buy it up after, let's say, 100 or 200% rise in the last few years that we have seen, for example, then you have already, it could be that the risk is already priced in. Nevertheless, let's have a quick look at this. So in 1980 it hit a high, then it dropped. The level that it needed to recover was around 830, and it did so 30 years later during the financial crisis of 2007/8. That's when it peaked to almost 2000 in 2011 and subsequently dropped to about 1000. Since then we have seen a steady rise kind of until 2020. Interestingly, when COVID hit, gold went down as well. And the last few years obviously have been pretty good if you've got any sort of gold, physical or exchange traded funds. But I would not buy it. The reason for this is currencies are no longer hedged. They are not pegged to gold at all. I think since the 1960s. So when we look at gold, it's about risk, and basically gold protects you when confidence collapses in a currency or economy. So recently we have seen the European Central Bank and Japan raising or holding interest rates steady, whereas in the USA they have been dropping. The US do have a higher rate than the rest of the world. So, at least the major economies. So the US rates going down means that the USD is being devalued because the cost of borrowing money is cheaper. And we also saw this in our last video when we look at the emerging markets. Look at this, for example. In 2025, S&P 500 went up by 16%, whereas if we look at the euro version of it, yes, that's the one, it went up by 3%. And the only reason for that is the currency exchange, because S&P 500, whether you buy it in rupees or euro, you're buying USD because they're US companies, they're traded in US dollars. So that means that most probably next year we will see emerging markets outperforming S&P, even though I said the opposite in a long-term view. The S&P outperformed. Our last video showed that. But specifically for next year, if USA continue to reduce rates, we will see emerging markets outperform because the value of USD will go down. And I know this is a video about gold, but that's a big part of it. The United States dollar is still a big currency used globally, and gold going up is partially because of the reduced rates that we are seeing, but also because of other topics. And basically gold performs well when inflation is unpredictable, and we are seeing risks of inflation rising again in Europe as an example. And that means that currencies are being, it doesn't mean, but some countries are reducing rates still. So we've got a few risks, including geopolitical risks, which have been ongoing, right, for the last few years. But we recently saw the president of China saying for his New Year message that he wants to see Taiwan reunified with China. This is a risk, obviously, but if I don't know if I should get into it, but basically if Taiwan is invaded by China, Gold won't matter at all at that point. And if we really have a crisis, a major crisis that we have never seen in the world before, let's say World War III, you won't be able to trade your gold. If you want to buy food and you've only got physical gold, the value of everybody will have gold. The only people that can buy things are those with gold. So the people that will have the power is not the people with gold, but the people selling potatoes, for example. So we will see productivity rising in the next few years, most probably due to AI, and that means that stability should return, or we will see more inflation. I don't know which one is accurate, but that means that most probably we will see gold continue to expand upwards. But that does not mean that we will not see it go back down again. So my thought on this is that it might hit 5k, could be higher, I don't really care. But then it will go back down, maybe to 3,000. It won't. I don't see it going down to the same levels of 2006 or January 2023. But I would not buy it here once we have, since we've had 13, 30 and 65% returns already. So it's a very similar case with silver as well. Copper is not one, but in my opinion, copper is being used in many more aspects than gold or silver. And there have been talks about platinum as well. But platinum is not really used as a hedge against anything in the way that gold is. Bear in mind that the only reason for this video is to raise awareness for retail investors. Do your own research before you buy anything. You can have a look as well at the central bank gold reserves globally. I've sorted this to look at gold reserves in change since 2019 and 2024. We have had in the last few years especially quite a bit buying from, I'm not looking at Ghana for example, because they had 8 tons of gold, now it's 30. Sure, that's a big change, but China is buying a lot more gold, even though they, in terms of relative change, it doesn't look that big. But all the countries were buying gold, most probably still are, and that means that the price might go up or it might go down. Nobody knows. The only thing that we know is it will continue going to the right. Make sure you do your own research. Don't forget that gold doesn't do anything. It's a hedge against risk, but what is risk? How is it defined? I don't think there is any one answer that can give you the correct output of thoughts on that topic. So gold won't produce return unless we have risk. So you might as well just invest in bonds if you want a safe return. I would not personally like to hold something that it might just crash for no reason other than things that are going well. Can you imagine having gold drop by 50% because the world is a lovely place? That would be unfortunate to hold it. But I will end it on that note. Take care and keep safe.